Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay, everybody, let's take a look again on the bond market. Today hardly we will need daily chart because you can see in the recent 4 sessions market stands actually in very tight range. It's more interesting to consider on the intraday charts because in the daily since nothing almost is going on. So currently market definitely feels the pressure of the coming non-farm payrolls report. So today we will get the first test of the ADP numbers, and tomorrow it will be non-farm payrolls. Well, expectations actually stands high on the markets. So if you'll take a look at the polls and forecasts in investing shadow, investing calendar, so you'll see numbers expected are relatively high, so 500, 600,000 additional jobs should be created in the previous month. But as I mentioned already yesterday, it could be really dramatic type of action today because the James Powell said that market expected to not expect big numbers within the coming 2-3 months. So statement really could make the overall situation tricky, and if indeed numbers will be poor, we should be fast recovery and fast reversal and upward continuation right to the XOP target on gold market. Currently, overall situation stands mostly the same as on the euro currency that we already have discussed. So whatever trade you will take today, it will be the bet on statistics. So if you do not trade the data releases, you're not an event trader. So in this case, it will be better to sit on the hands and wait what will happen. The one thing that probably you could try to use if you indeed would like to trade today and whatever will happen with the non-farm payrolls release, if you have the bullish view, you could try to place stop buy order above this area. Because if numbers will be good, market will start acceleration here with the breakout of this area. Sorry, vice versa, if numbers will be bad. This market will break this area. And you will be stepping in upward continuation to the XOP, because here actually above this area market has relatively free space, and when the barrier will be eliminated, I mean some psychological pressure from the anticipating of the high numbers, it could lead to the further acceleration to the XOP target. That's the only way what we could do here currently I see. So although I prefer to trade only when the all information you have on the table, and then makes the reasonable decision on the direction. Because currently you can see that overall price action by the technical picture also looks bearish as well as on the euro currency. On the 4 time frame chart, you could see that market shows the heavy behavior inside of the channel. I already talked about it yesterday. So here you could see early reversal to the downside. Market hasn't reached the upper border of the channel here. It's not proceed higher to this level, but then it turns down. But do it in advance of this, too early. Here's again minor pullback and return it back up to support. So it looks so that market is preparing for challenging in the breakout of this area. So hopefully market will be able to stay somewhere around the 1880 area. With these lows, rubber lows and previous highway pattern top, that would be great. But in the case of the breakout, especially numbers will be very strong. We could get some deep retracement, some fib levels on the daily chart. Currently on the daily, you could see that we even haven't mentioned it, because overall price action was gradual and stable. But a result of non-farm payrolls, probably we will have to consider some fib levels here as well. Second moment on the yes, of course we have the divergence the same, but we already talked about it. On the hourly chart, take a look what has happened. That's the pattern that we discussed recently. And indeed, you can see the healthy pullback has happened here. 1908 to almost $10 per contract, very good pullback recently. But currently market totally has raised it. So return right back down to the support. It means that the pressure is strong and market has no power currently to reestablish the upward trend, upward bounce. That's probably some, as I said, it's coming from the expectation of the high numbers, non-partials. In the current situation, it is not very friendly context for taking the new long position because it suggests a possible breakout. Currently I'm talking only on the technical picture. Of course, the statistics could change situation in opposite direction, but we can't take the bet on the statistics because we don't know what the numbers will be. That's why I'm talking that if you're event trader, maybe you will find something interesting here. But if you prefer to trade on the technical picture, currently it stands bearish and it doesn't suggest that taking the new long position. So from that standpoint, I think that my personal view on the gold is that it makes sense to wait and see what will happen. Because price performance doesn't suggest taking the new long position. Currently, I don't want to go short because, well, it's again, will be the gambling against the numbers, and overall performance here on the daily chart stands strong. In the current circumstances, taking the short position also is not very good decision, I suppose. That's my view on the gold market right now. Yes, on the intraday, on interest rates, you could see also that what has happened. Although market has shown this downside action and overall performance here stands friendly for the further downward continuation to the 153 area. The current moment, this was really weak response in the gold, so it almost has been erased. So gold, by this chart, stands right now already at this point. So you can see overall performance in the gold stands a bit heavier and even suggested by the interest rates performance. So this is another reason why I'm not considering currently taking the new long position.